You watch metals and markets every week, yet still shop with the big guys? Why pay more for your precious metals from the guys who have offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like Silver Shield and Heroes, SD War Collection, to our exclusive new line of insurance, approved, TL-rated precious metal safes, SD Bullion is what you're looking for. At the lowest prices, period. Guaranteed! Because if you don't hold it, you don't own it. SD Bullion, founded by stackers to help you prepare for what's coming. Shop with the Doc today at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us again is one of our favorite guests on the show. It's been a few months since we've had you on. Alasdair Macleod.
Well, I've missed you, but it's nice to be back.
It's always a pleasure to have you join us on the show with your analysis and insights, Alasdair. Well, guys, this week we had the FOMC, the December FOMC statement, and I must say for the first time in recent memory, we did not see a big takedown in gold and silver Wednesday afternoon and Thursday following the FOMC statement. I mean, nearly every single official FOMC statement released over the last 12 to 18 months that I can remember, gold and silver have been taken down pretty hard in the 36 to 48 hours following the release, but that wasn't the case this week. Silver has clung to $16, closing above it here for the week in the access market here on Friday. And gold, while it was knocked under 1,200 just prior to the release, or actually I believe it was Thursday, it was knocked back below 1,200, but it has held right around 1,200 and closing the week with really range trade over the last 72 hours between 1195 and 1,200. So all in all, pretty a positive 3 days following the FOMC release, at least from what we've seen in trading over the last couple of years, guys. What's your take, Alasdair?
Yes, I agree with that. And I think actually it is quite remarkable because the volatility in the other markets has been so extreme during this last week. It's been as if gold and silver have almost been sidelined. I mean, less so with silver. Silver actually really did suffer over the week, though it's nice to see that there is a recovery today. I think it's up about 20 to 25 cents on the day, which is a nice solid rise. Meanwhile, gold is almost unchanged on the day. There has been some volatility in gold and silver, but broadly speaking, you know, when you've had days when the ruble has shot from 61 up to 80 and then maybe sort of closed at something like sort of 65, you know, gold has sort of, you know, ended up unchanged on the day. And I think that was more or less the situation on, was it Tuesday or Wednesday? So I think that this is a good performance. I think it is very, very encouraging. And as you say, it's very nice to see over an FOMC statement that gold and silver haven't been panned. So overall, I would take it as really a pretty positive performance.
Yeah, well, you know, one of the really most important things to keep in mind is that what this is tantamount to is a deviation in what are cartel patterns. We see lots of those deviations in cartel patterns in the last 2.5 months since the bottoming. I mean, we've seen a couple of times where we've had outside reversals, very strong upside moves, particularly on that December 1st bounce back day on an intraday basis where silver fell all the way down to 14 and change and then bounced back up and recouped the entire loss from the previous day too. You know, if you look at the overall trading that Alasdair had mentioned, where, you know, volatility in all other markets have been sky high this week, yet silver and gold are just kind of plodding along, minding their own business, and it almost seems like for lack of a better way of putting it, the managed retreat process that we've described many, many a time, where the cartel will push prices down, but then in a process of just letting the markets back off because of pushing prices too far down elicits gigantic amounts of physical demand, now even showing up in the West. I mean, it wasn't that long ago where Germany's entire retail silver chain supply was, you know, completely wiped out, and the U.S. Mint going on allocation and Canada going on allocation and on and on. I mean, we've mentioned this in a couple of shows now. But the bottom line is that it shows that what's going on here is kind of like our moving through a stealth capitulation phase. Roll back period of time, 6 months or so, and most precious metals investors and analysts were looking forward, saying, okay, where's the bottom going to hit? Do we need to see some capitulation? What is capitulation? And I contend, as I did back, in late October, that we're moving through what was a stealth capitulation phase, and it is most visible in the mining shares, because if you look at the volume turnover that we saw, it was monumental. By the end of October and moving into November, we had already seen, a 1 week period where the volumes in the shares in that transition period equaled the entire volume for the sector for the whole year. And I don't think a lot of people have recognized this as a stealth capitulation. But as we move a little bit higher, reclaim, the next technical triggers where people look back and call this a bottom, I think that's the way people are going to see it. So that'll be the story for January. We'll see.
Can I add just a little bit to it? Your triggering thoughts at this end. One thing I noticed, which was very interesting, Zero Hedge reported rumors in the market. Actually, I heard rumors that there were rumors earlier on in the week that the Russians were selling gold. And I thought, no, this is complete nonsense. Anyone who actually has been following the situation with Russia knows that this has got to be so damn stupid. It's complete nonsense. Then Societe Generale's research department writes something which was published, I think it was yesterday, by Zero Hedge, or relayed by Zero Hedge, saying the Russians are selling gold. And Bloomberg ran an article the day before. And actually, when you trace it back, all it was there was a Russian news agency that reported a drop in Russia's foreign reserves, but mistakenly said that it was a drop in their gold reserves. I mean, so really what happened this week was that there is an assumption, if you like, amongst the mainstream media and the mainstream analysts that gold is going down, and they take something which supports their thesis and don't check it out and just report it blindly. I mean, come on, this is absolutely ridiculous. But this sort of behavior is so typical at a turning point in the market, and I think that's probably how I would look at this. There is another aspect of this. This morning, we got a report from China that the Shanghai Gold Exchange delivered into the wholesale market a further 50-odd tons. That takes it up to 1,955 tons for the calendar year so far. I think they're going to make 2,000 tons this year, for the second year in a row. And you know what? The World Gold Council thinks that last year it was 1,046 tons. Now, they're so off the page, these guys. It is really crazy. And I think that can only continue for so long. So I'm really I see a few straws in the wind which tell me that it would be wrong to be terribly short of this market. The only thing that does worry me is that at the end of the month, the end of the quarter, and the end of the year, that is when the bullion banks would like to see a lower valuation for precious metals. And if they can manipulate prices lower, they will do it. It was December the 31st last year that we bottomed out at 1183. It was the preceding June that we bottomed out, or was it it was the subsequent June we bottomed out at exactly the same level. We finally broke through it this time round, but they could have another crack at knocking it. But broadly speaking, I think that other than that, it's beginning to feel pretty good.
And even the preceding June before that, June 28th of 2013, was, I believe, the 1180 touching of.
Yes, you're right. I haven't got the chart. I haven't got the chart in front of me, but yes, you're right. That was the first time that it broke the 1200 and sort of went sort of $10, $15 below it. But it did exactly the same thing at the year end, forming that double bottom, which gave us hope that there was a double bottom there. And of course, that was smashed with an enormous if you like, sort of propaganda by the banks trying to drive the price down. They succeeded. But the other thing that's happened, of course, is that London has gone into backwardation with GOFO rates. And the first time it dipped down to the recent lows, GOFO went incredibly negative the whole way along, out to 1 year. It then went, when the gold price recovered to over 1,200, a little bit of stock obviously came into the market, and the GOFO rates then went just small positive, still indicating there's a shortage of stock, but it was no longer negative. It went negative again this week, and it seems to me that below 1,200 there is absolutely no physical stock in the market at all. And the follow-up we had today on all these stories I was mentioning about how the Russians were selling gold. Well, guess what? They announced that they have bought 600,000 ounces. I mean, so there you are. I think I think it's sort of set up pretty well for next year, really.
Yeah, that was for the quarterly number, was it not?
Yeah.
I mean, I don't have the translation of the math in front of me. I know that it was 55 tons that they declared. I mean, it was interesting because Putin did say yesterday in that long press conference and Q&A session, which was amazing in and of itself. I mean, Americans, compared to what we do in the United States, and considering all the pressure that's on the Russian regime and Putin in general to have a leader stand without any pre-screening of questions and whatnot for 3.5 hours is something that never happens in the United States. But all that being said, he did make comments to the effect in the English translation that the Russia was initially doing something with respect to selling, but that the bottom line is that he thought that it was a bad idea. The central bank thought it was a bad idea, and that they're not going to do it. It wasn't a very clear transcript, but I think to some extent that may have also made some people confused as to what was going on in Russia.
Yeah.
But clearly, their intention is to not sell.
Sorry to interrupt. Can I just go back to this Russian gold? It was actually the purchases in November.
Really? Wow.
Yeah. So another 600,000 ounces were bought in November. Now, admittedly, we're in December.
Telling.
But I would very much doubt that they've turned around and suddenly turned seller of that. I mean, it just doesn't make any sense for them to sell it. They've got overvalued dollars and they've got undervalued gold. I mean, what do you do? It's quite simple. You sell your dollars and buy gold, and that's what they've been doing. They obviously have seen that there's a huge, great flood of rubles coming out from the oligarchs. I mean, they've basically been the sellers. The guys with an awful lot of cash sitting in Russia thinking, my goodness, we better get out of this, hedge our bets, sell some rubles, buy dollars, buy sterling, buy euro, whatever. And that is really where the pressure's been. And it's interesting because the central bank of Russia, I think, has just sort of just let it happen. They said, well, there's no point in trying to stop this. We'll let it happen, and then we'll bounce the currency, which they did very effectively.
Yeah, they're letting some of the momentum just run itself down, and then on Wednesday, I believe, they announced a slew of provisions to help the central bank fight speculators, and lo and behold, the ruble has bounced back 13% since that point. So it looks like that strategy is working for them. Yeah,
I think that's right. The whole thing is fascinating. I was asked to appear on Russia Today. They've got a program which is run out of Moscow called Crosstalk, and I was given the sort of agenda, and it was all about Russia, gold, etc., etc. Anyway, by the time I got up to London to the studio, the story had changed, and they wanted to talk about the dollar and China. So obviously, the whole subject was sort of, if you like, off limits with the mainstream media in Moscow, which I thought was quite funny. But these guys do know what they're doing, and the head of the central bank is a very canny woman, Elvira Ljubljana, I think. I probably got her second name wrong. But she was Putin's personal economic advisor before she was appointed head of the central bank. She knows what's in Putin's mind. Putin basically is an old-fashioned Well, I mean, he sort of runs the country, if you like he owns it. Let's put it that way, as simply as possible. He's not interested in Keynesian economics or anything like that. He understands real money, real business. He understands about people getting rich and being able to pay higher taxes on the back of that wealth, not destroying the wealth. That's the whole thing. And so, there is, if you like, something going on in the central bank of Russia, which I would suggest that Western central banks don't fully understand. There are people in Russia who tell me that, the problem with the central bank is that they've sold out to the IMF and all the rest of it. I don't think so. I think they're playing a canny game. So I'm sort of, I think the whole, but also this business of oil is just, is fascinating. It looked in the early days like there was some sort of secret agreement between the US and Saudi Arabia to pan the oil price and break Russia. What happened? Yesterday yesterday's BBC television, they have one of the sort of leading consultants in the UK, or the head of the fracking or something, someone who's really very much involved with the UK oil industry, saying, everyone's going bust. Literally. So you can see the whole thing has backfired very badly if it was part of a plan to put pressure on Putin. It really has, and from what I can see, it's pretty well wiping out the shale industry over in America as well.
Yeah, it looks like the initial plan was to have oil drop to say $80, $70, maybe something like that. But as speculators want to do when they see a moving train, they jump aboard and push the prices far lower. And who knows? Maybe we've just seen a bottom that's corresponding to the ruble possibly bottoming. It remains to be seen. Obviously, it's way too early to call something like that. But the reality of the shale industry having a massive impact even beyond oil is something that I don't think most people in finance are really wrapping their brains around, because we're looking at maybe something on the order of 20-some-odd% of the high-yield junk credit market in the United States tied to these very shale plays and weaker oil plays that have used the high-yield market for their financing. And this is really dangerous. There's going to be a lot of bankruptcies in 2015, and that's going to create a supply snapback. A supply shortage, and then the prices will snap back. And the speed at which we've declined, too, is way faster than even what we saw in 2009. It's just been phenomenal to see what's happened in the price of oil. It's basically halved in a period of only a couple of months, a few months.
Yeah. I agree with that entirely, and I would add to it that the problem isn't stopping with oil. Emerging countries' currencies are getting absolutely hammered. A lot of these, African countries, oil producers there, Norwegian krona even, the Brazilian real, they're all getting absolutely panned. There are huge quantities of these lesser currencies being sold to buy the dollar. And there is also the problem that these countries have a very substantial amount of foreign currency debt. And by that I mean predominantly debt denominated in dollars. And as their currencies go down, their ability to pay this debt back, roll it, whatever, suddenly adds an extra burden to the currencies. So it's quite easy to see some of these currencies just sort of sinking and continuing to sink beyond anything that you would think is normal. If that does happen, then I think there is a global crisis in the making on the currency side, and that's something we've got to watch very, very carefully. The estimate is there's about 5.3 trillion of this foreign currency debt denominated in predominantly dollars, but borrowed by the likes of Brazil, Nigeria, South Africa, and all the rest of them.
Yeah, and that's also global in scope. When we've seen previous periods in 1998 and other periods where the emerging markets have had debt problems, it was more localized. Frequently, it would be Asia in 1998 or Latin American tequila crisis and so forth. And now this is just global.
Yes,
scope
it is.
Which the problems could spill over are tremendous.
Yeah, and the fascinating thing is that, we all think it's a Russian problem, but it's not a Russian problem at all. It's everyone else's problem. I mean, I wrote a slightly speculative piece a few weeks back suggesting that actually Russia could go on a gold standard. And the more I think about it, that is actually Russia's nuclear weapon. If they really wanted to screw the West, they would turn around and say, right, we're going on a gold standard. It would take them out of the foreign exchange markets. It would create absolute panic in the gold market amongst the shorts, because they know very well that the Russian government would be in there buying gold very, very aggressively to add to its reserves, at the very least. And I can assure you that under those circumstances, the Russians would make sure that even though the ruble would be fully convertible into gold, that it would be in nobody's interest to convert their rubles into gold, thereby holding the arrangement. And they could do that very, very quickly. They would need to follow it up with stronger measures towards sounder banking, for example, contracting the level of bank credit in the domestic market. They would need to do things like that. But, I mean, for goodness sake, they're doing that with 17% interest rates anyway. So, they're already on that course. Right. So they could do that if they wanted to. They could go on the gold standard. And if they do that, I mean, in the West, we're dead. It is a financial nuclear weapon, really. And I guess that's why they haven't done it. But I would, in a sense, I would like to see them do it, because anything to get us away from this printing of money as the cure of all evils. I mean, we're just going to destroy our own currencies, and when we destroy our own currencies, and we can't even go and buy a loaf of bread, and our elderly are starving, and all the rest of it, that is what I would really want not to happen. And I think if the Russians moved early and prevented us going down that course, however uncomfortable it would be in the short run, then I would certainly support a move like that.
Yeah. I don't know if you saw the article that John Butler from Amphora Capital published about 2 weeks ago. He had speculated not that it was a gold standard per se that Russia would use immediately, but more just the issuing of debt denominated or redeemable in gold, in ruble denomination debt. And that would be pretty easy, actually, for them to do, because it wouldn't require the whole systemic architecture of a gold standard being put into place. And who knows? I suspect that might be something that we would see as a first shot across the bow. And kudos to John.
It was John's article. He's a friend of mine in London. It was his article that prompted my thought. I thought, hold on a minute, this actually could work. I hadn't actually thought about it too hard until that moment. And it was John's article that tipped me off, if you like, that this was a possibility. And the more I looked into it, the more sense it made.
Yeah. And it's probably early days for any kind of gold standard to be embraced by the axis of China and Russia, but they're certainly enabling the ability to go that route a lot quicker than anyone possibly could have imagined. I mean, I remember 5 years ago or so, officials in the Chinese central bank would speak about full convertibility of the yuan by 2025 to 2030. And that's a precondition for having the full liquid capital markets that could switch over to a gold standard, in my opinion. Nowadays, believe it or not, I mean, you have officials in the Chinese establishment speaking about full convertibility of yuan being attainable by 2017. And generally speaking, you can probably cut that in half because they're so coy with the way they throw numbers around. But the fact is that all of this geopolitical nonsense that's been going on in the last year, all of the craziness with the U.S. and in turn the Anglo establishment, broadly defined, supporting of the dollar by trying to use military power as opposed to economic power, is accelerating their timetable in both China and Russia. And I think that we can actually quantify that in terms of the statements that policymakers are actually saying when they're tipping their hand, saying this is where we're going to go with our 5-year plan and central bank plan and so forth.
Yeah, I think that is inevitable over a period of time, because that's the whole reason behind the Shanghai Cooperation Organization. It is an alliance between Russia and China and the various other satellite countries in between. And I would certainly add Southeast Asia, because the Chinese diaspora down there, even though that is in the American sphere of influence at the moment, I think we could almost count them as being, if you like, predominantly Asian with respect to trade in the future. And you've got with India, who will join the Shanghai Cooperation Organization. I mean, Putin went to see Mr. Modi earlier this month, or was it last month? I think it was earlier this month. That is definitely in the works. And not only that, but Turkey is turning its back on Europe, on the EU, and looks like joining the Shanghai Cooperation Organization. And please note that the pipeline that was to be routed through Bulgaria and Austria is now being routed through Turkey. So it's going to cross the Black Sea and then go into the Turkey on the north side of the Bosphorus, and then be distributed through into Europe that way. So you can see that Turkey is going to have gas from Russia, and then it's going to on-sell at profit surplus Russian gas. So you can see that they're all sort of cutting deals to pull this lot together. And I think it's Genghis Khan's old empire, from Manchuria to the gates of Jerusalem. I mean, we're going to see it again.
Yeah. You know what's so ironic about all of that? Is that some 30 years... What's so ironic about all of that, and I apologize for the time delay, is we're talking across the pond and on Skype at that. But what's so ironic is that, say, when the Berlin Wall fell and all of the U.S. Geopolitical strategists in the establishment over here, people like Zbigniew Brzezinski publishing in 1998 the Grand Chessboard, and many a thinker in our establishment saying, hey, the Eurasian continent with 80% population of the world and 80% of the resources, I don't remember the exact numbers, but that being whoever would be able to control Eurasia would control the world, and we must stop that. And that essentially was the intellectual wellspring for what has been the encirclement plans for NATO and all the other things that the United States and in turn NATO has been doing towards Russia. And now that it's all coming to a head, it's actually producing the exact opposite desired results. The Asians are basically joining together and creating the Shanghai Cooperation Agreement and all of the other trade relations and the extensive projects that are being announced between China and Russia and China and India and Russia and China and India and so forth, and the pipelines to Turkey. So it's pretty amazing to watch these kind of dynamics happen.
Absolutely.
And I think that it just the United States set out to do a unipolar world, and we're realizing that that's no longer possible.
Yeah. Oh, there was another little thing just to sort of add to what you're saying about this. It's the Mackinder heartland theory you're referring to.
Right.
He who controls the heartland controls the world. And the heartland basically being, sort of Russia and out as far as the Yangtze, all that area. But China sent a goods train. It was the first train from Beijing to Madrid. It took quite a long time to get there, but it arrived, and that was the first. Now, that was some journey. I think it took about 10 days or something. That is quite something. So you can see they're opening up the trade routes. They're spending a total of some $40 billion on getting the old Silk route, trade route, fully functional. And that means putting in, all the sort of the infrastructure and everything else, so that there could be massive transiting of goods the whole way across the Eurasian continent.
Yeah, so and historically, the United States in the 1800s grew its economy largely by just serving its own internal market, and that's basically what they're looking towards, to build some security and isolation, or protection, better said, against the vagaries of geopolitical warfare and uncertainty. And the pipeline example to Turkey where South Stream was canceled, is a perfect example of that.
Yeah,
Putin has actually spoken to this directly. He's announced that that's part of what the strategy is in Russia.
Yeah, no, I agree.
Well, before we wrap the show up, I wanted to give the listeners a quick update on the physical market for gold and silver here in the U.S. We continue to see tightness, but it has eased up a little bit over the last really week and a half since that last big drop down on December 1st, where we saw just extreme shortages crop up really across the board. The U.S. Mint and Royal Canadian Mints both continue to allocate purchases from the authorized dealers for silver. The Canadian Mint has now switched over to the 2015 products in both the gold and silver maples. A bit of news on the gold maples. For the first time, the Canadian Mint is doing the full micro-engraving that it saw in 2014 on the silver maple for the first time as an anti-counterfeiting measure. And we saw, at least at SD Bullion, an explosion of sales in maples in 2014 versus previous years comparative to the other major government coins such as the Austrian Philharmonic and, of course, the Silver Eagle, as a lot of the customers really like that, the micro-engraving anti-counterfeiting feature. So that's now offered on the gold maple as well. And again, the Royal Canadian Mint has already changed over to producing the 2015 coins. The U.S. Mint doesn't change over their production for another month and a half. It's end of January before their 15 dated coins start coming out. I continue to expect we will see more of a shortage in the Silver Eagles, probably beginning in the next week or two, as the U.S. Mint shuts down purchases altogether for a good 4 to 6 weeks during that changeover period, as the market is already tight. Most of the dealers don't have big inventories built up for that period where the Mint will be selling coins. So at least on the Silver Eagles, probably we'll see premiums rise during that period. And they have already advised the dealers that the 2015 coins will be allocated when sales begin in January, but they're not advising the authorized purchasers how many coins they'll be able to purchase. So there's quite a bit of uncertainty there about how many Silver Eagles will be available in January. The generic market for rounds and bars, private mints, remain extremely tight. The Sunshine Mint is still not even selling their classic 10-ounce silver bars. Their silver rounds are about 6 to 8 weeks delay from the time you place an order. Other private mints are still running the 2 to 4 week delay. So silver continues to be tight. Gold, not as much, at least in the new products. In the secondary market, everything is pretty much gone. And by the secondary, like any backdated coins, so coins that were produced in 2013 or 12 or 11, typically there's pretty ample supply in the market as investors sell those back onto the market. But right now, just like 90% junk silver that's not being produced anymore, any backdated coins are just gone off the market, and the only thing you can get your hands on are new coins from the official mint. So I really have to agree with Alasdair, his thoughts earlier that if gold does go below 1,200, you're not going to see much physical whatsoever. So hopefully we won't see that for any prolonged length of time here as we go into 2015. And again, I'd also have to concur with your sentiments, Alasdair, that over the next 10 days here, we do have somewhat of a risk for another attempt to push the limits of the recent bottoms, but as we move into 2015, I certainly think the fundamentals are pretty strong.
Alasdair, may I ask, in the 3 weeks or so that has passed since the Swiss gold referendum, we've also heard more news about other countries seeking to repatriate gold, and I'm wondering, have you noticed anything interesting in terms of press coverage or maybe scuttlebutt within the conventional finance community in Europe that is now suddenly different, and people looking over their shoulders and asking more questions about the nature of gold in the monetary system, given that we have the, basically central bankers getting a little bit nervous about their gold, and their actions speak louder than their words. They may try to paint gold as a barbarous relic, but they're looking to make all of their gold come home, and so they can watch it very carefully. Is there anything, do you think, that has changed significantly since these news events have happened in terms of the mindset of the standard financial community over in Europe? Has the education value, so to speak, has that been something that's been fruitful from the Swiss gold referendum?
Do you know, that's a very interesting question. I think the answer to your question about coverage in mainstream media is that the coverage is actually somewhat disappointing. What interests me is that nonetheless there does seem to be a growing bandwagon of, let's say, I can't even say public opinion. I think I'm inclined to say central bank opinion, that some control has to be exercised over national gold stocks. And I think that the worry is actually coming from central bankers themselves as much as it is from the public, which is a very, very interesting point, because I certainly detect amongst central bankers, the few who I'm in contact with, that there is concern about gold. They see what's happening with China buying gold, and they see what's happening with Russia, and they know that there is something going on for which they are very badly positioned. And they also know that there really is no need to hold physical gold stocks in a center where you require it for liquidity, which was always the old story. That story is rather gone. And I think,
just to be clear for our listeners, since they may not understand exactly what you just meant, the old argument was we have to keep our gold in London and New York because those are the centers for gold trading, and if we don't keep it there, then we can't transact under a condition of emergency, which is what they considered to be the reason for holding gold in the first place.
Yeah, precisely. And I think to an extent also that the central bankers are probably trying to head off public opinion. Rather than get into the situation of being caught on the back foot, they would rather be, if you like, ahead of the curve, seeing which way public opinion's going. And there is another point about the European central banks. Apart from the Swiss central bank, and to a degree, apart from the Bundesbank, the central banks in Europe are now subsidiary to the ECB. So that when it comes to the big picture, as it were, they're no longer in the front rank of contributing to what that big picture is. They're almost sort of, second tier. And when you're second tier and you're not directly involved, the policy is not something which has got your name directly on it, then you have a slightly different attitude. And I think this is probably coming out in the policy towards gold, physical gold reserves. So it's an interesting question, that one.
Any final thoughts, Alasdair, on where we'll likely see gold and silver headed as we begin 2015?
Well, I just cannot. I mean, two things. First of all, looking at the value of it, the amount of paper currency and credit that is around is so great that, and this has been reflected in various assets increasing in value. I mean, fine art, stocks, bonds even, if you like, and so on. The flood of money has driven up these conventional assets. Even high-end property has been doing pretty well. Yet the one thing that hasn't been doing well is gold and silver. That is basically the best hedge you can have against falling purchasing power for paper currencies. Yet they have, for some reason, I mean, whether it's suppressed, whether it's a conspiracy or whatever, they have actually not responded at all. They have been almost held down. And I think the 2015 is likely to see a change in that, because that sort of relationship cannot go on forever. And the other thing is that we're in the West, we're in denial about the demand for gold from Asia. There is no doubt at all that that Russia and China and the other Shanghai Cooperation or Organization countries are all building their gold reserves. They see gold as having a direct role of some sort in financing cross-border trade. So if gold is going to return as money for those central banks, and we undervalue gold in the West, then I think that is potentially an explosive combination for the price. So I really do think, I think it should have happened by now, but it hasn't. But I think 2015 is likely to be the year when we will see a massive change in the value of gold and silver.
I know most of our listeners hope you're correct, and I suspect you likely will be, Alasdair. So.
Well, it's slightly bittersweet because I'm afraid the events that are likely to drive that are events that we're not going to like. In many senses, I would rather that we lived in a world of sound money and we didn't have to deal with things in such a volatile and unpleasant way. I think that the forces that are likely to drive gold and silver better are likely to be destructive for the standard of living for most people. And that, I think, is a source of great regret. It is the result of a mess-up of government interference. Really, in that sense, I see gold and silver as being the means by which we protect ourselves from the consequences of continued government intervention and the build-up of debt over the last century.
Certainly couldn't agree with you more. Well, Alasdair Macleod, Head of Research at Gold Money, it's always a pleasure. Thanks for joining us again, Alasdair.
It's very much my pleasure, and happy Christmas and happy New Year, everyone.
Same to you. We'll have you back on the show again soon, Alasdair. Enjoy your holidays.
Thanks. I'd look forward to it.
All right, for the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They used the word orderly. As long as it's orderly, it seems to be okay.